So this is uncharted territory for all of us, no matter how old you are. I'm not that old. I wasn't here in '87 to trade the crash, or I don't know if it was '97. I wasn't either there. So that's to put it into perspective, because we're gonna do some charts. We're gonna see some charts. I'm gonna show you some stuff that might be cool, but the main thing is to survive. If you can make money in this market, awesome, guys. And if you can make money in this market without doing anything stupid, even better. Even better. If you can make money like with your system, that's even better. Go ahead, yes. Kyle. I'm talking too much today.
All right. As usual, just got to lead with the disclaimer. This talk is intended for educational purposes only. It reflects our opinions and is based on our best judgment, but no warranty is given or implied as to their accuracy. Past performance does not guarantee future performance, and no investment or trading advice whatsoever is implied by our commentary, coverage, or charts. Today's session, guys, is going to be a little different, not the full 90 minutes that we're usually having. Just because there's not, we are officially in a bear market now, but there's not really a clear direction in terms of what's happening with the amount of volatility that we're currently experiencing. In the previous sessions, we're looking at monthly and weekly charts. I'm sure Mario will have something interesting for us to look at in that regard. But this is definitely going to be kind of an abbreviated session here. The one main thing that we are all kind of watching on SPY, I posted it this morning in the think tank, is this 272 support. Mm-hmm. You can see it was tested last year, March, then later in the year. We did dip below this afternoon. It did hold, but that's kind of the key level that we're keeping an eye on, this 272. So we'll see how that plays out. I'm all cash right now and pretty much no bias. Like Mario was just touching on a few minutes ago, if you joined us early, just kind of focusing on the market overall right now. Not really looking too much to individual names, with the exception of names that are presenting a catalyst. Like we had the Boeing today with they're defaulting on that loan or whatever the news was, presenting that volume pretty much like 5-10 minutes right after the open, and that gave the nice setup. But beyond that, staying focused on what the overall market is doing. Mario, you want to take it away?
Yeah, I totally missed that Boeing, guys. Totally. But that had the catalyst that we're talking about. So I'm going to show you different charts. Let me see. It's going to be my screen number 1. And this is something that I posted today for everybody. I'm gonna open the chat so I can see if anybody's asking anything particular. So Hassan. So market structure, right? So whenever I like, we've been talking about like finding levels where to trade and everything. So whenever I have no idea what to do, right? If we go to a daily chart in SPY, say SPY, we don't have much to see as far as the action. So I don't have a daily chart right here, but I'll show you. I'm pretty sure you guys are familiar with what's going on with here. So basically what I'm showing right here is this is all the action. Like this last chart that we have right here, this is all the action for 2020. So far, what I can tell you guys is that most of the volume was done at 326, right? So there was a lot of volume done, a lot of activity at 226, 336, and also at 333, which it's like the two tops that we have prior.
Is this like a modified volume profile?
No, this is called the market profile. It's similar. I'm still trying to find the difference between the two, but yeah, it's pretty much the same. Mm-hmm.
Gotcha. Okay.
Basically, what I'm looking for is like I want to know what was the biggest areas that we have over the last year, a couple of years, right? So with the other charts that I have, I can see it, but I have to modify it to create the amount of charts that I want, right? So what I'm doing right here, I'm just using the weekly one so that I can see what happened in 2018, right? So when we come to 2018, and I'm gonna grab my annotate tool right here. So let me get some color that I can use. I'm gonna use probably this one right here. So what we can see is we got this area right here, means that there was a lot of trading in here, 8, but not a lot of volume, right? You see in here, there was the same 8 periods that we traded right here, but there was a lot of volume. That's why it's like difference, right? So the biggest volume right here was here in 2019. That's the biggest volume right here. And this is the biggest volume so far for 2020, right? But there was this area right here where we have a lot of activity, right? So we got what supposedly was the top, but we didn't get the volume in here for confirmation. So once we start losing this, it starts getting interesting, right? The way I trade it, or the way I use this, is, if you can see this, there's a difference between the colors. Like this is deeper, darker, and this is lighter, right? So this is deeper up until here, right? And then we go into the lighter zone, right? So once you break this one, you can use this as a resistance, right? So for here, you can pretty much be short if you want, trying to trade all the way through here, right? I think right now we're 274. So what happened is we went to, I think the first move that we have in SPY stop at 290. Correct me if I'm wrong. That was 228, right? On 228, guys, if you've seen your charts, that was the day that we dropped really hard, and then we put a big green bar, right? Okay.
Yes. Yeah.
I know what I'm doing. I know what I'm gonna do right here.
We gapped down and then rallied.
This is the 228, right? This is the top. So let's see where we stop. By the way, 290, right? So is it surprising to us that the 290 is the biggest level for prior year? Shouldn't be. Look at the level, right? So that's when we bounce, right? That was the bounce. That was the bounce that we have. We went all the way back in 2 days to 313. So we came back up until here. Call it 313, right? Which make some sense if you consider that this could be a bell curve. For those that are like statistics will understand that, right? So we came in here. So by the time you bounce, now we have a new range from here, from the 290 to 313. We started trading that, and guess what happens? The next one we drop in, right? And we have this level here. This level is 272. Guess where we stopped today? 271, 2788, right?
Right.
Right. So for now, what I'm going to be looking pretty closely is 219 to 271, right? How far can we go if we really continue the expansion to the downside? My first target will be down here, which is the 260. So that's the way I use this, okay? Needless to say, I won't be looking to get long unless we go over 290 again, and then I'm aware. Here's the other thing, guys, and we've been talking with Kyle, we've been talking about to you a lot about this, is like, I know I don't know, I can poll you guys, but do you think I'm a bull or a bear? Kyle, do you think I'm a bull or bear?
Fair, but I feel like you approach each day unbiased.
I'm a perma bull. I promise you. You know, I'm a perma bull. Yes. Time
frame is the key there.
Yeah. No, the thing is that I have never seen a run like what we were experiencing over the last 3 months, right? And I'm a price volume reader. And the main concern, and I keep saying to you guys, like, oh, you can go and check the recorded videos. And I was like, I don't know. I don't understand why. I understand, they can bring the market up. And I posted one of my favorite passages from Reminiscence of a Stock Operator, where he explained how distribution was. Like that was like what, a month ago, right?
A few
Oh
months
yeah,
ago, yeah, I remember that.
Eduardo knows me. I'm a full bull. So yeah, I was like, guys, look how distribution happens, you know? And we were getting upgrades, and I was like, that's perfect. You see the distribution machine. Look at the propaganda machine. We were posting in the room, guys. So for me, it was like I was just waiting for this to happen, right? And I'm so happy, and I hope nobody's hurting here. Nobody's having long-term positions, because we get plenty of. I mean, I throw it out all of my concerns well in advance. Like, be careful, guys. Be careful, guys. Be careful, guys. So I hope nobody's holding into too much size to the long side, right? But what makes me happy is that we may be able to start building something for the leaps, you know, because I'm very bullish. I'm very bullish all the time. But going back to the point I was going to make, remember, guys, part of the trades of a bear market is violent bull markets, violent rallies, right? So that's what it makes it so hard to be short. Because people, after you watch the chart, if you go to a daily chart, I mean, if you go to the daily chart of the SPY, and I'm gonna clear this out again. Where is it? If you short right here, this day is so hard to. I mean, do you survive this day? You have your short. It opened at 322. At some point in time, they run it 11 points against you. Most of the time, most of us will be out with a 20, 30, 40% profit, right? Unless you're really good and I don't know what you're doing, and then you short it at the top, but that's a tough trade. And then the following day, you got this. Okay, let's pretend you survive this. Are you going to survive this pull again? We're talking 285 to 313. That is really hard. And then the following day, you have another green bar, huge, or even yesterday, right? This is a tough one. This is really tough. Then you have this is one of my best friend's favorite candles. Every time he sees a bull, he's like, oh my God, this is the end. This is the bottom, right?
The hammer?
Yeah. He loves hammers. He sees a hammer, he's like, okay, this is the bottom, I'm buying. No, you gotta wait, right? So it's really hard. I mean, it's not something that you can actually trade. Like if I'm positioning, I'll be surprised if I be able to hold for all of this move to the downside, right? So having said that, it's like be careful when you're trading. Like know your levels and know exactly that at any time. My best trades were yesterday and Friday. Both of them have the same characteristic. I went long into the close because there was news that the president was going to talk. So guess what? I know people are not going to hold into shorts, expecting that the president's not going to say anything that is going to hurt the market. Doesn't make any sense, right? So everybody will be expecting, everybody was going to be thinking, oh, he's going to come and say he's going to throw away money from a helicopter. I don't know what he's going to do, but everybody's going to be thinking that that's going to be the solution to the problem that we have right now. So you just jump into the long side, right? If you hold into long to your shorts, guess what? You will need really, really, I mean, really big, you know what, to hold into that overnight after a 600, 700 point move in 30 minutes against you. So being said that, let's go back to why I use these charts, right? So I'm looking for the big levels, right? And I love when I can find that my big sell-offs stop right at the levels. When I have this, it doesn't mean that this chart is in control, but I want to be paying attention. So for now, we have the 7, the 290, and now we have the 220 to 72 to 74. Remember, these are big levels. We're talking. This is where the most of the majority of the move was made in 2018, right? This is 2018 right here. This is 2019, right? And now we're at 2020. So this one is in play already. This one looks like it's gonna get in play. We play it. right? To the best of our ability, inside a range, like a range, if you want to play that one, or you can play the breaks here or there, right? When do I want to go and buy? I don't know. I think we can have another 10% drop. So we're thinking swings. I think there's plenty of time. So let's go to last, just a little out so we can see where we're coming from. So we have a biggest bull market, like amazing bull market, and this is how a bull market will look, right? Accumulation, paying up, they accumulate more, they pay up, they accumulate more, pay up, accumulate more, pay up, and what happened now? Started distribution, right? Because the accumulation, when we saw it on the other chart, was right here. What happened now? We have a lot of volume right here. So we need to, this should consolidate, something like what happens every single year, right? So we still need more volume. Either buyers are gonna show up and put one of these to be the biggest one, like the ones we have here, or we still got room to go, right? So here again is the 270, target one should be 260, and this will be extremes, 240s, right? So let's write that down. How is that going to look into? And this is why I told Kyle that I don't know if we can see so much into the into this normal chart that we say. So because in here what I have the 274. So basically we losing this 270, which we see there's a lot of volume right here. Look at all the volume in 280. Look at all the volume 290. We already talked about those levels. So after we lose the 270, actually the other chart gave us a better entry, because this one will call for us to lose 260, and this is the 240 that we're talking about. That was the bottom of December, right? Yeah, that was the December. Yeah, that was the December 2018 sell-off. So that's for targets. We can check it right there. Again, we only get back into being bullish if we go over these levels here, 300, 290, 300. We start accumulating right there. So that's number one. And I think I posted one of my favorite stocks ever, Apple, right? So for Apple, this is what I wanted to show you. So Apple's been this was coming down, then started going up. But look at the levels: 105, then we go 147, which is 42 points. Then we go 180, which is 30 something points. Then we go 210, which is another 30 points, and then we jump from 214 to 300 almost. So we went from 30 points to pretty much 90 points, right? This is the monthly. When we go and see the weekly, this is what I see, right? There was huge accumulation in Apple between 2018 and 2019. Let's call that probably institutional buying or whatever it is. It's at 190 and 200 bucks, right? Once we got out of that, out of balance, that's what it's called. We went out of balance, right? We go into price discovery. That's what it's called. So again, guys, we have the biggest volume right here, and it's something like a bell. It's not a bear curve because we have a fat tail. I mean, a long tail in here, right? But most of the volume should be contained in here, in these areas right here, where the darker colors are. So we got 240, we got the 200, and we got the 170, right? This is 2 years basically, where we pretty much stay within the same range. This is 240 to 20, which is nothing, right? And this is 190 and 200, which is pretty much the same for me, right? And then this one right here, okay? So problem is here. We have a 320, nobody showed up, nobody really wanted to continue paying up for this one. So what we have is distribution. I call this distribution. Once you break the 310, it's free falling for Apple. And that's what I've been bearish, and everybody think I'm bearish because I'm celebrating the short in Apple, but that was the reason basically. So we have big to fall. We can come 250 will be like the bottom in here, but if you see, we only have two periods right here, and we have very little volume. So not a lot of people show up to support Apple at the 260 and at the 250. Probably the prior year, and that's probably why we held right here. The 270 what's the price right now? 276. Yeah. So we're here 276. But once we break, lost my thing. Once we break this little hump right here with volume, we got nothing. We got nothing, right? I'll say 220s. So I think I talked to Scuba and I told him to please keep us posted because we can start looking at probably something in Apple if we hit 250, 260. By the way, the 260 play, that worked. If you follow me on Instagram, I did that one on Friday. The Friday we had a big move. We tested 260. I bought it and I dumped it. I think the following day, 2 days or 3 days later. So this one works already. This excess happened on, again, 228 was the day. 228. Go check it out. You know what? There it is. So those are the big levels that we always keep in mind that we gotta, I mean, they give us good opportunity. Like you see Apple 260, first time ever coming from 330. This is a big fall, you buy it, right? You dump it into the bounce. Now we're waiting because I don't know if this is gonna be, I don't know, right? Let's go back. And there you go. That's where we place the alarms. So this is a 260. Wow. We know it's that one, but it works. It works. It works. See, we're always seeing, this is called market structure, right? Because when we go into the little bars that we watch every single day, and if you're like me, that you look at the 1 and the 5 minute chart, you go crazy. You don't know. Like we have talked about this so many times with Kyle, that we talk a lot about the markets and how the markets, you know, try to develop new strategies and new theories. And I talked to Kyle and I say, like, have you noticed that sometimes when the market is like so dull or it moves so much, at the end of the day, you don't even know what happens? Like something, I don't know if that happens to you guys, but like, you're like, what happened in the market? And you really don't know. Or I ask you, so where's the market right now? Should we buy? And you like, oh, I don't really know where we are. I know we're down 20% from the highs, but where are we? And this is what I mean when I go out, like really out like this today. I don't want to be, what am I going to analyze on those daily charts if we have some big candles? One is red, the other one is green and huge, the other one's a hammer, the other one's a hanging man. So I got no clue what to do. So when we come and see the structure, and then I start seeing like the companies that we like, right? Like, okay, we like Apple. We think Apple is a great business. We think, okay, where were they buying in 18? Oh, they were buying 180. Where were they buying in 19? Oh, they were buying 200, right? Guess what? Where were they buying in 2020? 320. Now, the question is, were they buying? Was this volume buyers volume, or was this distribution? Well, we got the answer now, I think, right? And that's what we were talking about. So you start seeing all of the new products, the upgrades, and everything happen in the 310, 320, 320, 320, and they couldn't break it higher. Why? Because they were not interested in buying higher. They were just dumping the shares into the weekends, or us, retail traders, right? So now we have a chance. Now we know where they are. We don't know where they're gonna step in, because we don't have volume right here. We only have this day, the 228 day, that actually that's when they bought it at 250. So I won't be surprised if we just go down and then we start flirting with these levels, 210, 250. But those will be like I'm not talking about tomorrow. I'm not talking about 2 days from now, but I'm talking you guys, we all need to be on top of this if we start testing 250, 260, and 210, 220, right? 200, 210. First time that we see 210, don't short it. That's actually the place to be buying it. Okay? Same theory right here. The first time you touch it, likely a lot of people are going to be buying it. So that's it. Once you touch it once, twice, 3, 4 times, it becomes more susceptible that we have a break. But if you come in like here, that's what happened to the market, right? The first time that we saw the big sell-off, we just touch and a V-shaped recovery. The longer we stay in here, I know you guys know the patterns, the H and all of those continuation patterns. The longer you stay in here, and then when you break, you go, right? So I don't have, if you guys want me to check any specific stock to see, I mean, I don't know what you guys are following, because this is all I've been doing the last 2 days. Let's see, Microsoft.
So Mario, when do you decide it's appropriate to use this kind of analysis?
When we're in, like when we're here, and I show you again, because this is like we've been doing this for months now, right? So we have the uptrend, we have the small candles, we got the solid uptrend, now have the moving averages, right? The moving averages are going higher. I have my weekly chart right here with a pattern. I have my monthly chart with a pattern. But then when we start going like this craziness and everything, sometimes I tend, and that's personally, that's me, I tend to lose like sense of what's going on in the market, right? So at that point in time, I go into my longer term chart. By the way, this is part of my platform, so I have it every day up. It's just not that I see it, because I don't see the purpose of me looking at that, right? Every single day, unless I know that we're close to a level, and that's when I call the levels. I like, guys, this is a really important level. Or I say Apple can go to 300 or 175 or 275, right? When I call it, like, you know, when it was going higher, and I say, well, by the way, and then I read people, and then I'm like, yeah, these guys have the same, are looking at the same. Let's see Boeing. Wow, look at that. So we couldn't break 360. Look at that. And how, I assume that the question is, how low can we go? I don't know. Let's go see many months. Oh, look at that. Look where we stopped. So we're talking about levels from 2017. And we have compared the volume in 2017 versus the volume that we did on 18 and 19, right? It's pretty small, but we should expect to see at least some support in here between 188 and 175, which is where we are actually getting into. So I'd say we gotta watch that 188 to 175. Once we break 175, this can really get into trouble with 140s, and then we have 134. I don't think we're gonna get there, but that'll be interesting. Actually, I'm gonna write that down. So the BA, it's 189 to 175. And by no means, this is disclosure, I'm not an expert in this one. There's a lot of material, there's a lot of books that you can read about this. But to be quite honest, since I don't use it that much, the only reason why I use these charts, because you can see, like, you say, oh, Mario, he uses like volume profile, market profile, volume average, MACD, squeeze, all of that stuff. I don't use them that much. It's just there's some times when if my indicators aren't showing me anything and I need to get some perspective. All I'm trying to do here is put it into perspective. That's what I wanted to talk to you guys about this today. Like, this is another way that I see it, because I don't know what else to say. You know, is this the bottom? I don't know. Is this the top? I don't know. Let's see what the charts are showing us. So basically, we have Boeing, which is testing levels from 2017, and we have a massive distribution right here that we saw, right? How do we know it's distribution? Well, basically, we couldn't break it. We couldn't break it. We were fighting the whole year trying to break over 340, 360, and these guys basically just probably took their small losses right here. Those in the know, 340, 320, they say, you know what, I'm out. And once they got out, it's all down. Now, what's going to be really interesting is where the buyers are going to stop coming in. So I'll be looking at buyers in the 180 and the 140 area, right? When's that going to happen? I don't know. Volume is going to show for sure. Once we start seeing this type of bars in this chart, then we're probably going to be seeing something like this. Then at that point in time, we can review the chart probably 10 days, 15 days from now and say, once we go over 160, we go long. Our stop is going to be 140. Buy your leaps and take it to a bounce to 260, target one. And that's the way I think I'm going to be playing this second move after we find a solution to coronavirus, because I think it's just going to be, I mean, it's just a matter of time. I don't think it's over. So I keep my bullish bias there. So that's Boeing. Hassan is also asking about NVIDIA. Look at NVIDIA. Look at the chart of NVIDIA. Now, NVIDIA is one that I'll be willing to actually check in my normal chart. I still have support. I still have some resistance. I still have actually this one right here, the weekly, that I really like. So we're dealing with the level. Remember, guys, that I was so mad that we missed the 255. So I think we can put it back again, my alert to 255. So we're dealing with the alligator mouth, TM. How do you say? Yeah. So that's the alligator that we talk about, right? And we're back in here. We just put something weird into the alligator. So this is going to be interesting. This is going to be really interesting because I think once we get over the 250, this can really get going. However, it all depends on the market. Remember, guys, and I talked to Kyle before, and I say I want to make a disclosure today. If the market is going to continue dropping, it's likely 80% of things are going to fall. And I know, and I think, I don't know if you guys sense it, but I think Apple hasn't dropped that much, right? It's holding. I mean, compared to the oils, compared to the banks, compared to the airlines, you guys got to be like, airlines, dead. Oils, dead. Banks, horrible. What else is horrible? So when you see at Apple, you see like, yeah, we're down like 15%. I don't know. I think it's less than that from the top. So
yeah, it hasn't lost that February 28th low.
Exactly. So that will be if we get really going, and that's what I want to be like. Those levels right there that we have, that we just point out in Apple, those are the ones that we want to be seeing. We don't want to miss those and everything. So going back to what we were talking about, like for NVIDIA, okay, I can see stuff. I still see my alligator right there. I can see some sort of still trend in here. Here it is, right? So yeah, it's horrible as far as the candles, but look at the 241. Wow, we should have something at 240 for sure. It looks like a level, right? And then we go to the other chart. Let's see what's going on. And oops, what I did. Sorry about that, guys. Oh my God, what I did. I don't know what I did. There you go. Oh, okay. So 160, that's way too far. I'm working with 240. Here's the 240. This is where we are in NVIDIA, right? 240, 234. If we lose that 234, then we can start looking at the 198, okay? Based on this chart. Let me just double checking here because I want to make sure I have the charts that I need, and that's it. Okay, so I got it. So that's NVIDIA, and what else do you guys? CL. I don't know if we have CL. Oh yeah, we do, right?
No, //
CL. I don't think I have it. Oh yeah, I do. 33.65. So let's see what's going on. So 18, and look at this, guys. There was a transfer right here. So basically it was 48 for years, for 1, 2, 3, 4 years. Then they just jacked the price to 65. Then the last year they brought it down to 54, and now we're looking for, I don't know, the bottom right here. So don't know much about oil. What we can see is how this works. So let's bring this to your attention, because I'm learning right here too. I'm a student, so I look at stuff that I like every day. So look at 2018. Okay, look at the price on 2018. Look at our high. So basically what we did is they try to break it, and that was a solid, and that's how I use it, right?
Wow.
That's how exactly. Look at the high, 65.65, that was it, right? If you look at the rest of the chart, you'll see like, wow, it can go to 78. Yes, it can go to 78, absolutely. But first, you gotta deal with this massive volume. The massive volume was at 66. So that's what I'm telling you, like the first time you touch it, you just go, and I know, but you gotta go contrarian. So you gotta sell the highs, not buy the breakout. You go the other way around, right? So that's what happens, and it looks like that one worked, and then see what happened at 56. And once we start trading 54 right here, that was that was the end of January, actually, 127. So we broke that one, we broke this one, we broke that one, and I don't know where we're going. We go 33. I don't think my chart is gonna give me any more value, because I can go month, and that's as much as I can do. Yeah, we're looking at 5 years. So we're 5 years. Oh no, oh we have it right here. There's nothing right here to 26, but it's a tail, so this is an excess, right? That's an excess move. So actually, most of the volume was done like right here, is the 40 level, and I will assume that this is the 45, where the oil industry in the U.S. becomes profitable, like 45, 46, right? So those are levels to watch. So unless we start looking at 40, just the easier trade, of course, is hindsight. I mean, like this is when the levels really came into. So whenever I want to go long or I want to go short, something that is like swing or leaps or something like that, even though I don't do leaps, I'm not trading that long term this time, because I was not a fan of the bull market, and I lost the I lost the big correction on December because I was on vacation. So let me click in here. Anybody else have any? What else, Kyle? What do you have? Anything? Any stock that you hate? So we know if it's gonna go bankrupt finally. Look at the banks, 22. I don't see much there. 22, 24. And it works better for the ones that have been trading for quite a long time. AMD, right. Let me see. Yeah, look at AMD, relatively strong. That one still, we can use the normal charts, right? But definitely keep this level, 49.50. That's the key level for the 2020, and then I don't think we're gonna go see. You see these lines? That's probably because I put the lines from this chart. So whenever you see, yeah, that's what I get some levels
from
sometimes.
Like the normal chart.
Yeah, no. I was just those are levels that I just put on the other one, so that I can see them. So it was big accumulation in the 30. We saw it. We saw the breakout, and then it was just all the way to 50, right? And that's when we have that move from end of December up until I think it was like February. So we got like 2 months. So this is like 2 months worth of volume right here that we have. And now we're trading below. But we can easily see, oh, you know what, which one? AMD. I think this may be interesting. Now, look at the 59.33. We're still at value in ATVI. That one is really holding.
Wow.
Right? We try to break the 64. That I still have the green bar right there. That's the green bar that tells me that we gotta go long. So we've been talking about this for a year now, and the 50, that 59, 58. I know it goes down a little bit to 56, but in a grand scale of things, this thing, look at it, it's holding.
Yeah, it is. That 57.5 is the level I got on there.
It's just like, it's not going. I heard probably Microsoft, if we see it, look at Microsoft, looks pretty good too, right? Because we can argue that we may have support in the 140s. If it gets really bad, 143 will be like a level. So I'm going to write that down too. Microsoft 143, 145. And remember, guys, these are just levels for like longer term ideas that we can have. If you're gonna go over the long, then here's the other way. Here's another way that people will play this. And I don't want you guys to get too much into this, but you know, for those of you that I know, some of you really like to study. So for those of you who like to study, send me your notes, please, because I like to see what you see. Sometimes one of the theories that we have is, I'm trying to look for a normal distribution. Normal distribution is what we call, that we all learn about. It's called the bell curve, right? So most of the value will be within 1 sigma. I think that's the correct. Somebody correct me. I think it's 1 sigma. So what they say is like 70% of the moves is contained into the bell, inside of the bell, right? So what we try to look for is like this kind of balance. This is in market profile, they call it a D day, which is a balance day, right? I'm assuming this is a day because I just changed it to 15 minutes. So we're looking at days, right? Now we're looking at days. So what we try to look is for those balance days, and then you have the balance day, like today. You put your 70%, right? And once you start going over or out of the value zone, which is the 70%, right? There's two choices basically. You're buying in here, meaning you're buying above pretty much everybody that bought the prior day, which you would require extra volume to make sure your breakout is going to work. Now you know why I insist so much that you only trade breakouts when you have massive volume, because you're dealing with pretty much all of the people are below you, right? So you just gotta make sure you're buying at a right price and with a tight stop. So, but what a lot of people trade is mean reversion, right? Mean reversion will call for something like this, right? You will have the stock opening right here. They put a high, failed, and once you come right here, you will assume that you're gonna test the mean, and that's your short, right? This is a theory for this type of analysis. So where do you go long? So you go long exactly the opposite, right? So on a mean reversion long, what you will do is you wait for this one to open down. Once you back over the value zone, you go long. Your target will be the mean reversion. Got it? So it's used when you have a deformation, when you have a balance day, it's used to trade off the extremes. So you don't actually buy the breakup, but you buy the reversion. You short the reversion to the mean, and you don't short the low of the range, but you go long to reversion of the mean. I hope I didn't confuse you, but you can have the recording, so you can look at that again and then just go back and check the theory if you so want to do that. I don't, but I know where it is, so I know the level. So sometimes I can pick bottoms in a pretty good way. So SQ, look at SQ, has yeah, in a monthly range. Look at SQ. So we got SQ, and this is really nice.
Do you mean to be on the monthly or on the weekly right now?
Great cash. I'm on the weekly now. Yeah, because I want to see the whole year. I mean, we can go to monthly because the monthly is going to show us 5 years, right? But when I go to the weekly, I'll see more detail into what happened last year.
Right. Okay.
So what we're dealing right here is we stop at 62.58. That's the close of the day. Look at the low of the bar, of the volume bar for the last year. That's where I'm sitting right here, 62.58. So 63.69 can offer, actually, if you're thinking of going long SQ, that'll be my entry. Actually, I'm going to write it down. Wow, great pick, man. 63.70. 63.70 by 62.50. And we're right at value. So what I like to assume in this case is like this, we say we trade in 2020, right? We have no idea where we're going, right? We have no idea. I have no clue. I know there's buyers right here. I know there's buyers and sellers, I'm sorry, in here in the 70s, and I'm here, right? But we have a big sell-off, and we got nowhere to hang onto until we get into this level. And now I see that there was a lot of transactions made over the last year. Actually, that was the biggest level over 2019, sorry, 2019. So now I have a range that I can work with, and that range is 63.70, right? And 62.50, which is not bad at all. Granted, these are like the standards that I use. I don't modify my charts. So we can safely say that if we go 63.70, we go 70, 63.70 to 70, target one, right? And then on the 62.50, the problem is I'm gonna have probably some trouble here in breaking the 60, right? Because probably, guess what? What's gonna happen in the 60 is that the people that do the back to the mean trade, guess what they're gonna do? They're gonna wait for the breakout. Once we come back, they're gonna buy, right? And that's basically the difference when you try to buy the break, or you're trying to break the break right here, same right here, right? You try to go long. Once they see that it's failing, they short and try to take it down to the mean, okay? So I'd rather have it show me some strength over 63.70. We can see, like for AMD, because it looks like it may give us a trade tomorrow. We can go and see the candlestick chart, and it's right here. So basically what we're betting is on this level, 62 holding, right? And likely, let me see the hourly, how it looks. Probably going to have an entry here in the hourly. What was the level? 63.70. So I'm talking about 64. Once we regain 64, I'm going to do it here. So once we regain 64, it could be a long. And we play it to the target that we call is 70, which is right here. So you see, guys, sometimes the bigger time frames just are in sync, to put it some way, with the lower time frames. So if we see, say, 64 with target with volume, I'm willing to take it 64, 68, 70. At 70, I know I'm going to have some trouble. Doesn't mean it's going to stop there, but my trade will be likely done. Okay, so that's nice. How I go from extremely longer term analysis into the minutia, into getting into the daily. So that was a great pick that guys brought it here, because this is something that is almost at at one of the biggest support levels that we can have. I'm sorry, not support. I correct myself. There's a lot of activity right there. So there's a lot going on right there. So I don't know if it's going to be support. I don't know if it's going to be resistance. That's why I wait until it proves itself. So once we hold and we go over the 63.70, 64, I'm willing to play. You know what? This may be support. I put a 50-cent stop under that, and then I go. Okay. Yeah, long skew was the idea. Yeah, I get it. Perfect. So that's pretty much it, guys. It's I mean, keep playing the range. I mean the spies and day to day. I'm seeing the futures now. I know the president is supposed to address the nation at 9, so that may be that. That's why I'm not doing a lot of aftermarket analysis as far as charts, because reason being, I mean, if I find a 3 or 4 day pullback and I have into support with a beautiful hammer, then I'm willing to post it for tomorrow. That's the idea. I'm gonna buy if we go over XYZ. But the problem is we're not seeing those type of charts. So
Right.
I'm not seeing chart patterns. So I find it like I better read, I better drink some tea, go to exercise and everything, and go with the longer time frames. Just be aware and put the alarms where, you know, the prices we're gonna be checking. So I think we got them pretty much covered. We got the 272 on SPY.
Yes.
Can you remind
Absolutely.
me right? The 272. Oh, you have the 272. That's the same level, right?
Yeah.
Yeah. It makes perfect sense. After we break 272, we may have a little bit of trouble at the 271, which is right there, the same stuff. But then once we break 271, we go 260. I want to be in that short for sure. And then we play the other way around if we go over 275. Let's do 5 minutes more. Let me see the 60-minute chart on that one. Let's see what's gonna happen. So let's pretend that we're gonna be trading tomorrow. And we're talking 272, 275. So 272 is right here. Leaving the tail, the little tail. That's actually, that makes sense, because that's where I say we're going to have a little bit of trouble. So on the prior day low, that'll be the short, but the 272 can go. Oh, the 275. That's the one I want. The 275. So once we go back over here, I got so many lines in here. That means I've been trading the SPY, guys. That's all it means. 275. I'm gonna do 275. That's the 275. And 272, we got it right here, which is exactly the same level that Kyle showed us, right? And then to the upside, what did we say it was?
I thought you had mentioned 275.
287. Yeah.
Okay.
Yeah. Yep. Yeah, the 285 is like the scalp one, right? Then we have the 287, which is, by the way, absolutely perfect right there. So we'll be trading this range. We can totally trade this range. 275 to 287. Then on the 272, we may have a little bit of trouble into 270. So that's prior day low. And then we go to 60. And remember, guys, anything can happen. So don't be surprised if we move 15, 20, 25 points. So you've seen it. So you know it happens.
Oh, okay. Yeah.
What else, guys?
That was pretty good. Thank you, Mario.
Okay. I hope that brings some clarity, actually, that didn't confuse you too much.
No, that was very good. I think this is probably one of my favorite hangouts that we've ever done.
Really?
So, yeah, definitely.
That's awesome. I told you I have something special for today. Yeah. Yeah. Okay, awesome. Just send me a DM if you guys need something specifically. The best way to do it, just post a chart into the main chart, and I'll pick it from there, and I draw lines for you guys. But yeah, that's the theory. I haven't reviewed this in years, but I know that's the way I use it. Like most of the times, it's like I don't wanna buy the streams. I wanna make sure where the mean is, where the big volume is, and I know like we have talked this many times. There's if you move in 10, 15 points, you can make a point either side, right? But what I'm trying to do is I'm trying to always get into those trades that if I can write them, I can make the whole week, the whole month in one trade. And it's possible because what we do is options, which is extremely leveraged. So that's the possibility that we always have. I mean, every time you put a trade, you gotta assume that the worst case scenario is that you're gonna have a small loss because we control our losses, right?
Right.
But we don't know how long is that gonna go. I mean, how high is that gonna go, or how low is it gonna go? We have no idea with that one. So I encourage you guys just to keep track of that. See when or try to see when you're in really good positions. Like we have a key level. Make sure that we all know it. That make sure that we can. Because the good thing is that when we all in the same page, we can support each other. Like I'm long and I know Kyle is long and I see like, oh, we can go. Let's get another point on this one, right? Oh, let's get 2 more points on this one. Oh, my target's 5 points. Probably you say, wow, I was thinking a point, but this guy's going for 5. Let me go for 2.5. Guess what? You just doubled your goal, just like that, right?
Yeah, teamwork.
So yeah, so that's a teamwork, and that's basically what we do best. I think it's awesome. I think guys, I saw your trade today in Boyne. It was amazing. It was really good. That's what we gotta find. It's either that, a stock in play, or the market. Simple, guys. Keep it simple. Uh, get the easy money and be out of trouble. Okay. See you
There
guys
it is.
tomorrow. Okay.
Thank you.
No problem. See you guys tomorrow.
All right. Bye-bye.
Bye bye.